Well, I think the conversation before touched on something really important, which is the fact that job openings are really high. And what we're hearing from companies across the board is that they can't find labor. And they're looking for people to fill those positions. So to the extent that immigration policy reduces the supply of labor, that could be problematic for the economy. It makes it harder for companies to produce. It puts continued upward pressure on wages in a way that can also be really challenging for profit margins. So I think what we need to do is just think carefully about how we want the labor force to evolve. And ultimately, when you think about trend growth, a stronger increase in the labor supply, a faster increase in labor force participation is only that much better for trend growth in the economy.
Michelle, you and I were talking yesterday about that slightly weaker than expected retail sales growth. The jobless claims and housing starts today amply offset the disappointment yesterday?
Yeah, that was a nice positive surprise. We had strong housing starts, strong Philadelphia Fed manufacturing survey, also the strong Empire State manufacturing survey, and initial jobless claims coming down. And I think that that's generally what we're seeing in the data is that the economy is continuing to grow. The recovery is ongoing. Retail sales were a little bit soft, but it was after the very strong number in March. So when we put all the pieces in together, we're tracking somewhere in a low 2% pace for real GDP growth, which is above potential and is pretty decent at this point in the cycle.
So we're getting okay economic growth, Stephanie. I mean, well, what's the market saying about those fears of the U.S.-China trade war? Nothing's been resolved, but things certainly seem a lot calmer in the markets.
Things are a lot calmer, but I think it has to do with positioning. I think on Monday, people were so nervous because we had so many questions about trade. There were so many unanswered questions, right? So I had heard targets of like 2,800, 2,500. Someone was going to buy the market at 2,310. I mean, it was such a negative sentiment on Monday, and I think you had caution as a result, and I think you had some positioning as a result. People sold off positions. They took profits because we have had nice gains from the December lows. And then as we progress through the week, well, things aren't as bad. I mean, even on trade, okay, Huawei, this could be a disaster if it really escalates. I don't know if it will. But at the same time, you have the auto tariffs getting delayed. You have maybe some sort of a progress with Mexico and Canada. So trade doesn't even look that bad. And then the real kicker to me is you had great earnings from two bellwethers, Walmart and Cisco. We were really bracing on Cisco to lower numbers in a big way, and they did nothing but say good things, and they're really very well prepared. So I think things just not so bad, right?